Hey there, it's Walter here from FX Jake, and what I want to show you is something pretty cool. We had some jumps recently, and so what you'll notice here, this is actually all of this. This is all from the Jump Sunday webinar. If you haven't been there, it's pretty cool. fxjake.com/jump. It's free, and you can go and check out the Jump webinar. It's at 6 p.m. Sunday on every Sunday night, New York time. Not every Sunday night, because sometimes I'm on holiday, but almost every Sunday. Okay, so let's just zoom in here and see what happened this week. So there was a jump trade, and I look for these to be, all the rules and everything are in that members area, so you can get all that stuff there in the old videos and all that. But what's interesting to me is how the 1 hour candle differs from a 4 hour. And I talk about this at the webinar where, it's so much safer to wait for the 4 hour. Now, you might miss the trade, but if you wait for that 4 hour candle, you're actually usually better off. And let me show you how that worked out here. The reason why I say that is because the 1 hours will sometimes do exactly what happened here. So in this case, we had a buy order right here above the high of this 1 hour candle, and you can see it was triggered right there on the next candle. So the first hour prints, second hour hits it, boom, and third hour goes up, fourth hour, bam, gets stopped out because 77.42 was the stop, and clearly it hits the stop right there. Then it goes a little bit lower, and then boom, off to the races. Comes back down, retraces again, and then boom, even higher. Now obviously it's gone up for the rest of the week. Now what is interesting is if we compare this one, and I'm going to just actually, what I'm going to do is, I don't normally do this, but I'm going to put them side by side so you can see the 4 hour versus the 1 hour and see for yourself. That wasn't a very good idea. I should do it like that, yeah. And then we're going to go, we'll have to get a new chart here, but that's all right. Should be, where is it? Where's my Kiwi? Oh, it's a major, of course. Of course, the Kiwi's a major, yeah. I still find that funny. Alright, now we're going to go 4 hour like this, green and red, and there it is. Now here, hold on, that's not it, it's all the way over here. There it is. Okay, so here is your 4 hour jump. So remember, we're targeting, I mean, we could target this low right here, but we could also target the close. A traditional jump is to the close, which is in this case about 50 pips. So here's your 4 hour candle. Alright, there's your 4 hour candle right there, and the market doesn't trade higher the second. See, when this is when it, remember, it stopped out here in the second 4 hour candle, it stopped out. And guess what? It actually triggered on the third candle. So this is where we get triggered on the. So we miss getting stopped out. On the 1 hour, we get stopped out. On the 4 hour, we're totally sweet. We get a little bit of a pullback. But remember, our stop loss is all the way down here below the jump candle. And in fact, you could have put it below this candle after, because it didn't get triggered on this candle. It got triggered on this candle because the buy is above the high. So really, we could have put a stop right there, and I normally would have. I would, if I see a new low, I'm always going to move my stop below that new low on a buy trade, and vice versa on a sell. So what happens is it comes out. This wick actually hits that wick, so that would have been cashed out or really, really close. Comes back down, pulls back again, and then boom, bam. Finally, this candle here, it hits the target, and it's game over for that one. Now the other target would have been this high right here. And you can see it tops out right there and has a little bit of a pullback before going even higher. So that is the difference between a 4 hour jump candle and a 1 hour jump candle. Notice how the 4 hour candle is much more conservative. Now it could have just gone immediately and closed the gap, and then you don't get a 4 hour trade, right? Or maybe you end up with a belt. That's still okay, because look at what happened on the daily. We got a daily belt right here, right off all these lows. Brilliant. It's gone up. So, waiting can be rewarding, And going in early can mean making the trade that you wouldn't get if you went for the 4-hour chart. But waiting for a 4-hour or daily setup to me is worth it, because what happens is you lose these, because the little jigs that you get on the 1-hour chart aren't going to hurt as bad. And so for me, it's much better to do that. I hope this helps. I hope you do some testing on jump trades. They're brilliant. And I wish you happy trading. See ya. Bye.